So we're just delighted to have a very informal conversation this
morning. So much, Gary, and thank you, Lily and Andrew and all of the team for inviting me to be here today.
An exciting topic, which is how do we inspire innovation in financial services?
For those of you who may not have gotten my entire title, I'm with the Office of the Comptroller of the Currency, which is the national bank regulator. And so I have a very bank supervision and regulation focus, but I am currently leading our Office of Financial Technology, which is very focused on outward players in the financial services industry, including fintechs. So got a mix of perspectives on this, and looking forward to our discussion.
Well, we have about 20 minutes, and so to avoid me wandering, I actually made a list of questions. So we're going to try to follow be fairly efficient through. So the first thing I want to ask is, as I think about the vision for fintech at the OCC, can you describe the OCC's overarching vision for the role of financial technology within the banking system? And then how does the OCC plan to support innovation while maintaining safety and soundness?
Yeah, so the OCC's mission is the safety and soundness and fairness of the federal banking system, as well as ensuring compliance with laws and regs. And we see everything we do through that lens. We are very supportive of responsible innovation, and I do emphasize the responsible piece. That's been sort of our watchword since at least 2016, because we see the changes. I mean, everything is changing. You know, this conference is focused on payments, but all the aspects of what banks do, deposits, lending, payments, markets, treasuries, all of that is digitizing, it's moving fast. Everything is, is at a pace that maybe we're not as accustomed to, haven't been as accustomed to in the past. And we see opportunities. We think that all those things can help banks do what they do better, and bring additional people into the regulated financial system, additional companies, additional customers, but there are risks as well. So balancing that innovation with risk management is really our focus in terms of how we look at these things. And we have sort of emphasized, one of the things we emphasize is that when banks look at technology innovation particularly, they need to have a business case for it, obviously. And then once you figure out the business case, it can't just be the shiny ball, no FOMO here. Fear of missing out. I learned that from my 23-year-old. But the business case, you got to have the business case. You got to have the expertise, all the way from the technical to the board. You got to have, and then bring in the risk management and the compliance people early on to identify the risks and manage them, and talk to your regulators. And with that kind of combination, that kind of team sport approach, we see a very bright future for responsible innovation.
Well, that's good to hear. And innovation comes with not only risk, but the inherent mistakes, and things sometimes break. And so you have to find a balancing act between what's your tolerance for those things. And it's not easy. And as I think about kind of continuing the innovation discussion, one of the stated objectives of the OCC is to foster competition and support bank innovation. So what are you doing to promote fintech advancement that benefit consumers while still protecting financial stability?
Yeah, so what we do a number of things in that regard. And I mentioned 2016 because that's when the OCC became the first federal financial regulator, bank regulator, to establish an Office of Innovation with that specific focus of fostering innovation and new ways of delivering products and services to bank customers, while also ensuring that it was done in a responsible way. Last year, the acting comptroller I'll call it upgraded our office to the Office of Financial Technology. We've broadened, we've expanded, we've really integrated it more with the rest of the agency so that we're not only doing outreach and bringing in information, but are ensuring that our staff at the OCC is up to date on these innovations, that we're providing real-time feedback to our examiners who are out there in the field examining banks, and we're getting that real-time feedback from them as well. So across the agency, we now have a novel bank supervision unit in our mid-size and community bank supervision department. We have economists and data scientists and experts in our supervision and risk analysis unit. There's an integrated approach that we're really working on. I mean, obviously, everything's always a work in progress, But that's sort of our efforts from our perspective to ensure that we're applying a risk-based approach to this, that we're encouraging banks to engage in those bank fintech arrangements when they can be done in a responsible way that's consistent with safety and soundness and compliance with the laws and regs. So the laws and regs haven't changed. It's just the way that things are delivered that's changing.
And so on the other side of the innovation coin is the question of risks and how do we address risks? And it's, as you think about it, what are some of the most pressing risks that the OCC sees in adoption of fintech and regtech by financial institutions? And are there any additional ways that you and the banks can balance risk without stifling innovation?
Yeah, so as a bank regulator, risk management, risk is what we're all about. We have a risk-based approach to everything we do. And we look at risks at a couple different levels. I mentioned that our mission is about the federal banking system. So we look at systemic risks as well as individual bank risks. And when we're talking about sort of innovations and particularly fintech, financial technology innovations, there's a number of risks, and I'll just mention a couple of them. On a more systemic level, applying sort of across the board, we see the risks related to financial crime, for example. Fraud. I've noticed a number of your sponsors are really focused on that, which is great. But the potential for increased fraud, increased cyber, of course, money laundering, terrorist financing, which is another part of my policy responsibilities, all those things are a real concern. There's also consumer risk, right? While fintech delivery channels, expansion of services have the potential to expand services to previously underserved populations, there's also the risk of harm because, as you said, the inevitable mistakes when you're innovating. How do we make sure that those, not that mistakes aren't going to happen, they are, right? But how do we make sure that there are systems in place, that the compliance management systems are in place so that when a mistake happens, it's identified quickly and it's corrected and people who are harmed by that are compensated. We also have, of course, sort of more risks of, I mentioned expertise, I think, a minute ago, right? Is there the expertise in the system and in the banks specifically? There's also, of course, operational risks and things like that across the system, and those are also on a bank level. On a bank level, one of the things that we look at all the time is whether the risk management can keep up with the innovation. And that's a very case-by-case specific kind of approach. That's why we encourage banks that are looking at innovating in these ways to talk to their regulators early and often. Because if we're looking at this together, then those kinds of risks can be managed better. And we do find that where banks are addressing those kinds of things in the planning stage, that's going to be a better outcome. The banks that tend to get in trouble, we do occasionally have to bring in enforcement actions or issue concerns. Those tend to be ones that got sort of out in front, saw a great business opportunity, went for it, and maybe didn't do the kind of planning that's needed in order to ensure that can be executed appropriately.
Donna, my first company was the first issuing processor of prepaid cards, and by the late 90s or early 2000s, 7 of the 10 largest banks were our customers in the US, 50 banks around the world. And my last company before Payall, MasterCard acquired, and that became MasterCard Send, which repurposed the PIN debit networks. And the point is that emerging payment models, emerging payment types have been something that's been near and dear to my heart for the last 25 plus years. And I've never seen a time like it is today with new payment models. Everything from cryptocurrency to digital payments, instant payments, buy now, pay later. It's absolutely a wild time to be in payments. And as a regulator, how do you adapt, or what your thought process is about adapting your regulatory approach to these new payment models? And what role do you see the OCC playing, not only today, but in the payments landscape for the future of new payment models?
Okay, so that's a lot of questions there, and I'll try to make sure I hit all of them. But in terms of the new payment models, one of the things that is a big challenge, both for the banks and for the bank regulators, is that we've gone from a world where, in most cases, the bank was the sole entity on each side of a payment transaction. There was a bank on each side, and it was a payor, a payee, to a system where banks there's a often a long payment chain, and banks are sometimes just in the role of intermediary or gatekeeper. And so there's not the question of, do they have the transparency? Do they have the information that they need to comply with the applicable laws and regs is a huge one. But one of the things that we focus on a lot because of the pace of change that you're talking about, and you didn't even mention open banking. I mean, which is a whole another area of rapid change, but or cross-border payments. But as we look at that, we look at the bank's change management systems. It has become more and more critical that the banks have in place strong systems for managing change and for making sure that they have a process when these things come in to identify the business opportunity, the risks, the controls, that there is that overarching framework or underarching framework. And the same thing is true at the OCC. We've been changing how we approach things, trying to make sure we're breaking down silos. I don't think I've ever talked more to my operational risk colleagues than I have in the last year, right? Because on my side of the compliance risk, we have consumer protection, AML, CFT. They're looking at the bank information technology and the payments and the fraud side of things. All those things are really converging. And so as we look forward, I expect that we will continue to see banks evolving. The sort of the approach that I've talked about, the risk management approach, is slower. I mean, I always have to acknowledge that, right? As bank regulators, our motto is absolutely not move fast and break things, right? We're charged with the safety and soundness of the system. But that said, if we ensure that there's planning and approaches at the beginning of those kinds of innovations that put in place the gates, put in place the times when risk is going to be reassessed and re-identified, then there's a much better chance that we can move at a pace that balances the innovation and the competition and the need for compliance and sort of safety and soundness on the other side. One other thing I do want to mention is that the acting comptroller, Mike Sue, as well as our undersecretary of the Treasury, have both identified the fact that in the payments space particularly, there are gaps that are caused by the lack of a federal framework for payments. We have 50 different money transmitter licenses in 50 different states on the domestic side. And that system, by its nature, with the speed of change and the speed of payments, creates circumstances where it is very difficult to manage the risks that are arising. And so we have, as an agency, we have been vocal about the fact that we think Congress should consider a federal payments framework, not necessarily to cover every piece of the landscape, but at least to set some standards and sort of a baseline for how we operate. Just as we have in other areas, like in lending, we have consumer protection laws that apply across all types of loans at the federal level, no matter what entity it is that is making those loans. Same risk, same regulation, same outcome is the thing we want to all strive for.
It's a perfect segue, transitioning from risk to compliance, when you reference the lack of a sort of a payment structure federally, and then the different approaches that states have adopted. I've met with the CTOs or head of technology of a couple larger banks, and one of the things that they talk about is that the vast majority of their resources, the resource budget, is spent either protecting their systems from bad actors, trying to keep their disparate systems common or updated and always refreshing and dealing with old code and ancient tech, and then trying to keep products in compliance. So they have very little capital left over for innovation. But when you go down the list of all the innovative products you described, I left off cross-border and open banking, imagine the constraint that puts on the tech systems at the banks. But now, continuing from a regulatory perspective, how do you balance not risk, but compliance with all these new innovations?
Yeah, so that's I think I've sort of been talking about them as companions as we've been going through these questions, because that's how we really view it, is the risk management and compliance really go hand in hand for a bank. The same regulations apply to payment, from in terms of the ones that there are at the federal level, but across the banking system, the regulations that are in place to protect customers, to protect the financial system, to protect our safety and soundness and financial stability, those all apply regardless of what technology a bank is using to implement them or whether they're partnering with third parties. We haven't really talked much about third-party risk management yet. That's a key issue here, as many banks, of course, are partnering with fintechs that have developed great technology innovations. But those companies that are coming from outside of the bank regulatory framework, often are not in a place where they have developed the same kind of compliance systems. So looking across that and address it is a challenge. Compliance is definitely a challenge, and it's one that is best addressed in the planning stage and continuously across the life cycle. One of the things that we have comprehensive, what's called third-party risk management guidance, that the OCC issued together with the Federal Reserve and the FDIC last year. It's an update to guidance the OCC has had in place since 2013. So it's not new for OCC banks. It is the expectation that when a bank engages with a third party, particularly in a critical function, one that provides services to customers, one that protects the infrastructure, one that protects the IT systems, then there needs to be a continuous life cycle of risk management for that. And part of that risk management is the piece of complying with the applicable laws and regs. And one of the things that we see that is challenging for banks is when they enter into a contract with a third party, a fintech, the contract is allocating functions, like who's going to do what. One of the risks I didn't mention earlier, which I should have, is data security, right? That's a huge one. The contract allocates functions, but the responsibility for compliance with the laws and regs always remains with the bank. The bank cannot outsource its responsibility for compliance. So the function can be outsourced, but the bank still has to ensure that in that contract, they retain the right to get that data, to have the transparency, to get the reporting, to get the information that they need to ensure that the compliance is happening. And it is absolutely a challenge,
Yeah.
and I'm sure that the CTOs tell you all the time how challenging that is, because they tell us. And we try to support that in every way that we can by reviewing systems, by identifying issues early, by working with banks to sort of put the systems in place that allow them to do that in the way that's most efficient.
So we'll move to a topic that's a little less, a little more fun to talk about.
Compliance is fun.
Yeah. Okay. Sorry to the compliance officers. I didn't mean to offend you. I actually like good regulation, by the way. I just dislike bad regulation. So there's a difference between.
I agree.
The next topic is really about the promise of fintech to create products and services for those who don't normally have access to them. And I'm thinking all the way back in the earliest days of prepaid, how these cards and these accounts were seen as an alternative, a more affordable alternative in some cases, an accessible alternative to a bank account. And I had the privilege of being on the board of the Center for Financial Services Innovation, now the Financial Health Network, for 10 years. And we saw this, studied consumers and their financial practices and how they lived for over a decade. And it was remarkable the need for financial services for a large percentage of our population. Given that this is one of the stated promises of fintech, or should be, what's the OCC's view of promoting or supporting or enabling financial services that are more inclusive?
So we are absolutely supportive of financial inclusion for all the reasons that you stated, but also from a safety and soundness perspective. One of the things that when you look at the financial crime side of things, the more people and customers that we can bring into the regulated financial network, the better transparency there is. And fighting financial crime is all about transparency, about being able to monitor transactions in a way that allows identification of potential, whether it's fraud or money laundering or terrorist financing. That is the critical thing. And so if we promote financial inclusion, if we're able to find ways to responsibly bring more people into the regulated financial system, whether it's through some of the programs that the FDIC supports, like the Bank On, basic bank accounts sort of network, that kind of thing. We do. That's one of my other responsibilities is the Community Reinvestment Act, and we are very supportive of expanding inclusion there. The OCC has also, since 2020, I think, I want to say, convened a group that we call REACH, which is a convening of bankers and non-bank financial companies, community organizations, civil rights groups, other nonprofits and academic organizations that come together to try and identify and address barriers to access to the regulated financial system. One of the projects that group worked on, that I'll just mention one of them, over the last few years was, and this is not an OCC project, we just provide that forum for folks to come together and identify. One of the issues that was clearly identified was the access to small dollar credit for people who are credit invisible, have thin or no files. And the companies came together and developed a pilot, which has now been talked about. There's public reports from several of the banks that were involved, but to provide secure small dollar credit cards as a second look product for people who wouldn't ordinarily qualify. And it's been massively successful. The default rates on that are as low or lower than their standard products, because they're looking at alternative data in a way using new technology that wasn't really, and cash flow data in particular, in their bank accounts in a way that just wasn't done 10 years ago. I won't say it wasn't possible, but it really, you talked about systems and getting systems to interact. By getting their systems to interact in a way that they didn't before, we're able to expand financial inclusion that way. We also have a focus on fairness in our strategic plan, and making sure that in our Community Reinvestment Act work, in our fair lending work, in all of the safety and soundness work that we do, that we're looking at the fairness of the financial system, banking system in particular, federal banking system, for the people who are previously have generally been underserved or less well served by the federal banking system.
I don't know if you all caught it, but there was some enthusiasm in Donna's discussion about financial inclusion. She sounded like a product manager at a bank, so it's really exciting.
Well, I did spend the first 20 years of my career at the Civil Rights Division of the Justice Department, and I did fair lending work, so I'm sort of very enthusiastic about that particular part of my job.
So, we've had 15 or 20 minutes of just heated questions and covering topics in kind of great detail and a lot of stuff. Your plate's full. What are your priorities in terms of financial technology and innovation and regulation?
Well, that's a big question. So we have a lot of priorities, but I would say that, I keep saying this and it sounds a little cliche, but it's really true. Our priorities flow from our mission, which is safety and soundness, fairness and compliance in the banking system, and that overlay that we've had since 2016 of responsible innovation. We actively encourage, through a whole range of programs, banks to consider innovation, because that's where the market is going, that's where the industry is going, but to do it in a responsible way so that they can do it successfully. And the Office of Financial Technology, which I've had the privilege of overseeing for the last year, is a great team. And we reach out in order to sort of facilitate that mission. Most of the rest of the OCC is very focused on the banks we supervise. The OFT team is also focused on the rest of the industry. We regularly have one-on-one meetings, we host office hours, we do outreach, and we serve on interagency and international committees, trying to ensure that we are understanding what the latest emerging technologies are, what the innovations are, bringing that back to the OCC on a real-time basis so that we can be supportive of our banks as they consider, these sometimes very challenging approaches to innovation. but that some of them are going to be the future of the industry. So, we always remember, as you said, at one point in time, charge cards and ATMs were considered incredibly radical, right? And so some of the things we're looking at today that seem crazy from a state bank regulator perspective are going to be the future of the industry, and that's where we try and go.
So let's close on a topic that I'd be remiss if we didn't talk about. It's not necessarily a fun topic, but it's one that's should be at the top of our list, which is we have banks are struggling with sometimes ancient systems. Mm-hmm. They're working with a variety of new tech companies to develop new products to bring innovation into the banks, and they have disparate systems as well. These aren't one or two systems, but in some cases, there's a bank in Europe that the CTO shared with me. He has 10,000 different systems.
10,000 systems?
Imagine the care and feeding that goes into maintaining.
Okay. That's the worst case scenario I've heard.
Yeah, it is. But with that as sort of the overarching umbrella, how do we deal with data security? We've got criminal gangs that are incredibly well-funded, nation-state actors, and we're trying to innovate, we're trying to be compliant, we're trying to deliver great new products and services, and yet we have really sophisticated bad actors coming at this industry. We see it, there's not a day that goes by that we don't see it.
Yeah, so that's definitely one of those challenging things. I think that when I've talked to bank CEOs and to the heads of the agencies, and the one thing that really keeps people up at night is cybersecurity, which is one piece of what you're talking about, I think. And it's got to be a multi-pronged approach, and it has to be everybody working together. In terms of the systems, one of the things that's sort of surprising in some ways, but when you think about it, not so much, is that when you look at these attacks, the ransomware attacks and the other kinds of attacks really targeted at financial services, the ones that tend to be the most successful are the ones that started with a person, right? They're the phishing scams. They're the lack of two-factor authentication. They're the failure to update that patch, to do that patch update when it's needed, what my colleagues like to call blocking and tackling, right? And so we emphasize that a lot at the OCC, those sort of basic, those basic things. That has to be the starting point. And data security, yeah, that's just huge. The public trusts us with their money, right? And that is something that I think we had at the OCC. That is core of our approach to things. Is the public is trusting these banks with their money, and we're charged with overseeing that. And so, as much as we we support innovation, it's got to be safe and it's got to be sound. And the issue of how to make the 10,000 systems, I have no idea. but the sort of looking across the systems, the change management piece when banks are engaging in M&A activity, making sure that they are looking across all the different. It's not just about what products and services are we offering on the front end. It's how is that back room going to work together? How are those systems going to interact with each other? How are we going to keep the data secure? Those questions are really tough. And, the good thing is that some of the new tech, I think, really offers a lot of potential for the ability to systems in ways that have not been possible using sort of the old-time technology, I'll call it, which is great. And then also just in terms of fighting the criminals, using AI and some of the other emerging technologies on the good guys' side is also showing a lot of promise as well. So, but it is definitely a nonstop, no easy answer to this. The complexity, the interconnectedness is continuing to make it more difficult. But I think fortunately we're all working together on the side of the banks. And particularly in the area of cyber, there's some really successful public-private partnerships. The FISIC and other organizations do a really good job of sharing information about the threats and that, we need to do more of that and do it better as we move forward.
So Donna, sadly our time has expired, but
Yeah, the red light is blinking.
sincerely appreciate your participation and
Absolutely.
candid conversations. I think we could maybe, should we ask one question or two if we have time for it, or what do you think?
Let's do one, because I always like to sit and talk, but we have a quick question for our panelists. Wow, everyone's so
We answered everything.
Oh my gosh, here we go.
Hi, you mentioned the possibility of the federal regulation for money transmission licenses. I wanted to get your take on how realistic you think that actually might be. I know it's dependent on 500 people you don't control, but what your view is. So
if I understood the question correctly, it's how likely do we think it is that there'll be a federal payments framework? I do not predict what Congress will do. I've learned long ago not to predict either what the courts will do or what Congress will do. But I think that there is a growing consensus that's not, in my view, partisan, that is a need, right? And I think there's a lot of the companies that are involved in this recognize that having a framework that doesn't displace the state networks, but or the state operations, but maybe sets a federal baseline could be very important in advancing the industry and in ensuring that there's a level playing field across the country. So I'm hopeful, but then again, I'm an optimist. I mean, I wouldn't have been a federal public servant for 30 years if I weren't an optimist that we can, make change and do things better. So hopeful, fingers crossed.
Thank you, Donna. Thank you very much.
Great.
Thank you.